if the tariff rates that are ultimately implemented globally are substantially higher than they are at present, that the next generation of iPhone will be optimized to fit inside a certain human orifice. We will also have,
hopefully with some bubble wrap.
Welcome to the New Asia podcast by Muddy Waters Asia. If you like this episode or want to dig deeper into Muddy Waters New World Order Fund, head to muddywatersasia.com or follow us at Muddy Waters Asia for more.
Welcome to the Muddy Waters New Asia podcast. I'm Carson Block of Muddy Waters Capital, and I'm here with our head of Asia, Rob Med. Rob and I are actually in Mumbai, India. We've been here all week, but Rob, I want to start by talking about Vietnam, and specifically, what are you hearing from the ground about Vietnam and tariffs right now?
Really pleased to be on the podcast again. And the most important thing, as you say, talking about the tariffs, I'm very pleased to hear. We've been to a bunch of AGMs. We've spoken to senior management, some of Vietnam's largest companies. And the really good news is not only is the government taking it seriously, but we're being told that they are making quite a lot of progress. There's been a lot of repetition about it's about the trade balance, not trying to tax Vietnam producers into zero. So all good at the moment. And I'm hearing people talking about somewhat a best case of, say, 10%, worst case of 25%, both substantially lower than the 46% people have been talking about. So good news.
Yeah, so I think it's worth emphasizing that when you just said not trying to tax Vietnamese producers out of existence. At 46%, obviously, the implication seemed to be, or you can have interpreted it as, the Trump administration wants to bring back textile and sneaker manufacturing to the United States. So it sounds like what your sources are telling you is that's not the flow of the discussions, that there is a much more realistic tenor from the U.S. administration. Is that accurate?
Yeah, I think that's makes a lot of sense. I think what is becoming quite clear is the 46% number is a sort of Trump come out with something so outrageous, you get a lot of attention. Maybe it gets you top rankings on the TV, but it's not what people really think is going to happen. Clearly, but to just deal with the 46%, most Vietnamese exports are a disaster, partially because a lot of work that's being done in Vietnam is what I describe as competitive labor contract work. So let's say Nike buys all the raw materials. It rings up the factory in Vietnam and says, what will you quote to actually make these shoes for me? It's not the company in Vietnam coming up with a shoe of their own accord, selling it branded and all the rest of it. And it was, with a branded product, the actual cost of the product is tiny. It's a lot about the services, the retail distribution, et cetera, that goes on top of that. So a 46% tariff would be ugly, but survivable. When you're on a competitive labor contract, it's really Nike coming in and saying, well, I want you to make this for $5 because if you don't, some guy in Bangladesh will make it for $5.50 or $4.50, but I like you because we have a history. So obviously a 46% tariff just blows that out of the water. There are some products like shrimps and stuff like that are actually grown in Vietnam. But again, they've got international competitors, and Vietnam has maintained and grown its market share where it can because they've been really, really competitive. But 46% just kills you.
So at the range that you're hearing of 10 to 25%, how difficult will that be for Vietnamese exporters? What's your expectation? And do you think, not just for existing exporters, but what do you think the impact will be on FDI going forward if we're in that range of 10 and 25%? And look, don't treat 25% as equal to 10%. If you have a sense of really what the gradient of difference is between the two in terms of how it washes up in the real economy, I'd love to hear that.
Yeah. 25% is what I describe as tough but digestible. Current factories would stay because they've got a history, they've got a relationship. It's ugly, whatever labor advantage they may have over Indonesia or some of the other countries in the region basically is wiped out. So it's, you got to make sure everything's perfect every time. The big problem, which you've just alluded to, is you're not going to attract any extra factories to come to Vietnam at that point. People are just going to turn around, they're going to maintain with what their current suppliers. They might increase a few orders over time, but basically there's no new FDI coming in. 15% starts to become a bit more marginal. Most people, when I talk to them, say that the Vietnamese labor cost is around 15% lower than elsewhere, though recently in in India, they did say that depends what the labor is, there's higher or lower costs. 10%, that's kind of workable. And it really depends on what the deal is.
Well, okay, I mean that semi sounds great, Rob, but do you think there's a credibility issue here? One of the things that I think has been very difficult or will prove to be very difficult is that the Trump administration began all of this actually by, on a daily basis, threatening to tear up the USMCA, which was the agreement that the first Trump administration negotiated, or was a renegotiation of NAFTA with Mexico and Canada. So do you think, I mean, is there a sense that
what you've brought up is exactly the problem. Look, it's all very well turning around and saying 15% is workable. Some factory, I've already got a relationship. I carry on manufacturing and I'm a bit pissed off because my margin's been eroded. Question is, I'm Samsung and I want to put $1 billion factory somewhere. I'm not getting a return on that $1 billion factory in the first year. It takes years to get that money back and be wise and build relationships. And remember, you put the factory in, but a lot of these guys, they want to suck in suppliers and all that. So everybody's sitting there going, I've got to take a multi-year view. Now, you talk about NAFTA, okay, because Biden came in the middle, that agreement's been around, I don't know, 6 or 7 years. Well, they've probably just about got their money back on a factory, and all of a sudden the regime's changing. So how does the US and then Vietnam assure people that when they put a factory in, it'll still be viable because the tariff won't change? And so the difficulty becomes for Vietnam is, look, guys, we will get it down to a level that we can all survive and carry on, but Vietnam really needs FDI, as we talked about before, and uncertainty kills that.
But the thing is, if you're Samsung, there's no jurisdiction that would be immune to this uncertainty, even the U.S. Manufacturing electronics or high-end electronics and semiconductors is the type of manufacturing that the U.S. is supposedly targeting reshoring. So if you're Samsung, does it make sense to build that factory in the U.S. given that same uncertainty? So I guess what I'm really asking is, in a situation where it seems like you've got this uncertainty in any direction in which you look, does Vietnam still get the factory because, hey, you're rolling the dice no matter what? Or do businesses like Samsung just freeze their CapEx?
Well, that's got to be the nightmare scenario, really, for everybody, where Samsung just turns around and says, unless I get government guarantees, then I'm not spending any money. Now, yeah, so there's an opportunity then for the Vietnamese government to turn around and go, look, we'll give you a putback at book value if for some reason the tariffs change. And that could be the smart option to do that. And look, when you look at Vietnam's competitive position, it's not the biggest country in the world, but FDI and exports are so important, that may be the route they have to take because that's the price. Of course, by taking that route, they then win all those factories and that sucks in a lot of other people. So it's both a pain and provides a lot of benefit. So that will be good. The problem is if you're Samsung and you say, look, I can get around all this, I'll just go and build my factory in the US. Well, yeah, but a few people have tried to build factories in the US and found that the workers aren't available, don't do the hard work that you needed. So it's a real problem wherever you are. And I think it's a bit like people turning around and going, shits out of China have dropped like 30%. Well, yeah, because if you're anybody who's putting capital at risk, you're sitting there going, do you know what? I'm just going to wait and see what happens in the next couple of months.
Well, what is Vietnam's government's capacity to take that sort of fiscal gamble? I mean, whether it's a one-off with Samsung or, I mean, there's a risk that other investors are going to want the Samsung deal. What's the capacity?
I would have thought it's both infinite and reasonably limited. It's infinite because if you're going to die, you might as well have the Hail Mary pass. But it's limited because they have money, they have assets, but they don't have vast amounts of foreign exchange reserves. The flip side is, of course, if you do get those factories to come in, you can get it. Essentially, the taxes will cut your cost base over time. So if I was sitting there speaking to Jens Hectolam, I'd be saying, look, you've got to do this because we really want to pull those factories in. And if we can achieve critical mass and we cut some sort of a rolling deal with the US to ensure that we don't get another surprise tariff out of the middle of nowhere, and perhaps we get 2 Trump golf courses in rather than just one, and a few other relationships with the Trump dynasty, then maybe that's a solution. But yeah, I think you're absolutely right. The risk is people go just too hard. But it literally is life or death for Vietnam, so they got to get there. And I think it would be ultimately ironic in a weekend when they've talked about reunification and liberation in Vietnam and celebrated the 50 years after the war, if they end up having to put themselves into a hawk to a few manufacturers to make sure that underwrites the future of Vietnam.
Yeah. Now, there's another dimension here, though, that is looking at whatever the tariff rates are, not only for Vietnam, but for all of the U.S.'s trading partners. And as a U.S. taxpayer, with not really low rates that are applicable and a lot of complexity, we engineer our incomes in the U.S. all the time. And this is one of Art Laffer's real criticisms that at least lands with me about high tax rates, is that businesses and wealthy individuals then spend resources trying to minimize taxes and get cute. Couldn't the same thing work with tariffs? I mean, aren't there ways that you could engineer, if you as an exporter to the US, aren't there ways that you could potentially engineer things so that the cost basis is lower? And I'll give an example that I caught this past week. I guess Delta Airlines is taking delivery of some Airbus 350s, I believe, but they're going to take delivery in Japan and then fly them over to the US because the tariffs don't apply to used aircraft. And so if they take delivery in Japan, apparently once they get to the US, they'll be deemed used. And so it's an inefficiency. It's less than ideal, but does that ability exist, do you think, for exporters of products other than aircraft?
Oh, well, I thought for a while that there's a reason why there are so many lawyers who become politicians, and that because most politicians are running a job creation scheme for lawyers. And I think the tariffs are a job creation scheme for 2 types of people: lawyers, because they're going to spend lots of time rewriting contracts, fiddling tax schemes, and all sorts of other stuff. And the underworld, because smuggling is obviously going to be a big part of this. I mean, certainly in the UK many years back, there were a lot of people who were smuggling cigarettes into the UK because the tax on cigarettes was so high, it was worth doing. And again, if you look at some of these tariffs, you're sitting there going, well, look, do I send, in Hong Kong, people would send armors over the border to buy stuff and shuttle it between the two. It's kind of a bit more expensive. But look, if you fly to China, how many iPhones are you going to need to bring back before it covers the cost of flight and allows you to make some money on the side? And that's obviously at a personal individual scale. There's going to be meaningful tariffs, and I would say by anything over 20% creates huge opportunities for smuggling and for lawyers. And when I look at and you're just bouncing ideas off the top of your head. You sit there and go, well, actually, and particularly now, we think of software as a service and all that sort of stuff. You think, well, what is a product and what is a service? So if I go again, going back to my thing with shoes, if I go and buy the shoe parts out of China, and then I get it assembled in Vietnam, well, should I be paying import tax on the actual parts that I bought from China? Because that's going to be one rate. Because actually all I got was a service in Vietnam. And if I own it all the way through, how does the tariff work? Now, a simple person would go, well, you bought it out, you'd pay the original cost and you'd pay the cost of assembly on top of it. Yeah, but there's bound to be some smart aleck lawyer who's going to find some way of routing things around. And I know of friends of mine who do export out of China and Vietnam, and they've already talked to me about how they're going to change their habits to make sure that they charge for product, they charge for services, different thing. They're going to be rebating costs. They're going to move offices that they say they were building and making in China and then selling from Hong Kong into the US. Well, now they're going to sell from themselves in Hong Kong to themselves in the US and engineer things around so that it removes the need to pay a lot of tariffs. And I look at the Hong Kong luxury boat business. Hong Kong doesn't actually manufacture any boats, but what it does do is people buy boats in Germany and places like that. One of the big costs in building a luxury boat is all the accessories and they've gold loos and all that sort of stuff that people put in. Well, they take the boat out to Hong Kong where all of that stuff is VAT free, gets put on the boat, and then they sail the boat back again. And of course, what's happening in Hong Kong is just servicing, which, to your point with Delta. So look, lots of people are going to do all sorts of funky things, and the margin and the money is going to be big enough to make it all happen. Finally, the other thing, and someone talked about the other day, was, look, there's a bit of a shell game here where you turn around and go, well, I used to, let's say, manufacture in China and send it to the US, because guess what? Even if you go through the ocean, it's kind of vaguely not too far away. And then people move that to Vietnam. Well, now what I can do is reroute my Vietnam manufacturing to Europe. And I was manufacturing in the Egypt for Europe. Well, I just send that to the US. So it's really annoying. It adds extra cost. But does it really change things dramatically? And no. And does it really encourage people to manufacture in the US? No. But again, all that I've heard from, shall we say, people I know that are close to diplomatic negotiations and stuff like that, and I've got some quite good friends in the US and a few people in the Vietnam government, is that it really is much more about it's trade balance, number one, and making sure that those tricky Chinese folks can't riddle around the tariffs that are on China.
Well, I mean, it does sound like if the tariff rates that are ultimately implemented globally are substantially higher than they are at present, that the next generation of iPhone will be optimized to fit inside a certain human orifice. We'll also have,
hopefully with some bubble wrap for transport.
We'll also have some great, smuggling related plot lines for a new Netflix series as well.
Yeah.
Well, I guess, just in that world of meaningful tariffs, what works for Vietnam regardless of tariff rates? Like does anything still work well there?
Look, I think the Vietnam story can morph. It might be a slower GDP story. Let's just say all the exports die gently over time. Stop tomorrow, disaster. But if they die gently over time, you've still got an enormous amount of tourism going in. There's a lot of people who find Vietnam attractive for tourism. There's a lot of, we talked about before, services coming out of Vietnam. There's sort of IT outsourcing, been a bit of an AI scare, but the reality is lots of people need lots of software written. It's not all going to be done by ChatGPT. And even if it is going to be done by ChatGPT, a Vietnamese software engineer can do it for a hell of a lot less than a US or even an Indian GPT. So I think there is room for the economy there. There's a lot of grit in the Vietnamese economy, which can be ripped out through digitization and improving efficiency. We discussed last time that General Secretary To Lam has really prioritized both digitization and removing some of the government slough out of the system, which is great news. One of the things that I would like to see is both they are talking about boosting capital availability, and that's obviously something that a government can do by turning around and providing money. One of the great advantages, although obviously Vietnamese dong is not a reserve currency, most of the debt in Vietnam is Vietnamese debt, and the government debt is Vietnamese debt. They actually paid off a US dollar bond last year. So they have the ability to create credit if they want to, and it's very much under their control. So there is a lot the government can do. They need decent infrastructure. All of that sort of investment stuff can be done. Better education. They can convert a section of the Vietnamese population from relatively low margin manufacturing to higher margin, higher productivity services. But that all takes time. So in the short term, we will, if it's a 46, it's a disaster. If it's 25, it's tough. 10 to 15, survivable, and a pragmatic government can go, right, we've taken a fist to the nose, we got to think our strategy, and we can come out of this in a really positive way, but it will take time.
Given that we're sitting in Mumbai, albeit on different sides of the building at present, I think we'd be remiss in not discussing, at least at a high level, impressions of India and how things here compare to Vietnam in terms of impact of tariffs and the trade war and some of these issues that you've just brought up with Vietnam.
Yeah, I mean, it's fascinating. I've been to India on and off since 2003, and so I've seen booms and busts, and every time you come along and you sit there, and particularly if you come up after it's just boomed, you're sitting there going, God, I wish we'd bought when it was a fifth of the price or whatever. And then there are interesting things. There are big differences. There are similarities. Both Vietnam and India were part of the ex-Soviet Union political sphere. One is what I would describe as democratic but socialist, whereas Vietnam is communist but capitalist. It's a sort of odd dichotomy, different. India's economy is very much domestic, starting to think about export, and actually has a current account deficit, whereas Vietnam is very export focused and has a current account surplus. You'd have to be naive to think that both of them didn't have a slightly overbearing government that probably interfered a little bit too much with the private economy. But they've got time to change that. There is, again, both countries need spending on infrastructure. India's done a lot of that over the last 3 or 4 years. Vietnam slightly less so, but hopefully gearing up. So really exciting places, and we're here because we think there's going to be an opportunity, and we look forward to exploring that. But I think Vietnam is going to be our core focus, at least for the next 6 months, because it's a market we think we're beginning to understand. Once we get through the tariff period, we can hopefully really capitalize on that.
Yeah, well, look, that's a great stopping point. I know we will be returning to India discussion a number of times going forward, but appreciate those insights. They're fantastic, and look forward to seeing you at dinner shortly.
Look forward to it. All the best, and thank you, Carson. And for anybody who's kind enough to listen in, we are going to try and do this on a rate of once a fortnight. There's going to be so much to talk about over the summer, so we look forward to staying in touch.
And for anybody who's listening in who's not British, fortnight is every 2 weeks.
Thank you very much, guys.
Thank you.
Thanks for listening to this episode of the New Asia podcast by Muddy Waters. If you like this episode or want to dig deeper into Muddy Waters' New World Order fun, head to muddywatersasia.com or follow us at Muddy Waters Asia for more. Don't forget to like and subscribe.